the next cycle will result in $200,000 to $300,000 Bitcoin.
You're the co-founder of Rain, the first regulated crypto exchange in the Middle East.
Bitcoin is the most exciting technology in the world right now. We were fully operational in 2019, raised $120 million from Coinbase, Kleiner.
Bitcoin price depends a lot on government printing and how the monetary policy goes. But I see it in the next 10 years, Bitcoin reaching around 750K.
I agree. I think $750, $1 million is very attainable this decade, I would say.
Sinan is the co-founder of BiLira, which has created the Turkish lira stablecoin. Why are we in crypto?
Money printing by the governments. When I read the Bitcoin white paper, that's what drew me in, because it offered a solution against the centralized government entities to just print money and create inflation. And this was giving out a solution for a new medium of exchange and store of value.
What advice would you give to someone who's never owned any crypto but wants to get into crypto? Thank you, Sinan and Joseph, for joining Truth Central podcast today. Just to introduce Sinan and Joseph, Sinan is the co-founder of BiLira, which has created the Turkish lira stablecoin and offers brokerage and market maker services. And Joseph is the co-founder of Rain, the first regulated crypto exchange in the Middle East and currently the largest regional crypto exchange. So thank you both for joining.
Thanks for having us.
Thank you for having us.
Just want to start off. What drew you both into the crypto space? Why are we in crypto? Either of you.
Amazing. Sinan, you want to start?
It was money printing by the governments. And Bitcoin, when I read the Bitcoin white paper and then the Ethereum white paper, that's what drew me in, because it offered a solution against the centralized government entities to just print money and create inflation and change the purchasing power parity of the people. And this was giving out a solution for a new medium of exchange and store of value.
Absolutely. I'm so glad Sinan went right into it, because that's exactly why I got into the space as well. I've been in the space for over 10 years now, started buying Bitcoin and being interested in the space in early 2013. And much the same, I think of my role, in this world as providing people with a dependable store of value. Because I think the way our global monetary system works today, we have forms of money that operate as a medium of exchange, as Sinan mentioned, a unit of account, but the store of value property isn't as strong as it used to be under the gold standard. So we've kind of lost that, and I think Bitcoin brings that dependable store of value back.
Fair enough. So the main reason why you guys both got into crypto was because the current financial system of medium of exchange that we use is inherently a flawed system. It's inevitably going to lead to a lot of inflation over time and not going to function as a true or a good store of value. On that point, what role do you feel crypto will play as an asset class, as a store of value, currency, medium of exchange?
Stablecoins have been the largest product market fit product, because they're actually making the banking system more efficient. So for instance, sending money from Turkey to the Gulf or from Turkey to the US, it uses the SWIFT system. And eventually, SWIFT system is a messaging system between banks. But there has to be intermediary banks and all these systems where it's limited to certain working hours, and it takes a super long time. So it's either delivers 6 hours later the same day or the next day. But with crypto, with the Ethereum blockchain, it allowed people to create an if function, a new messaging system where it's decentralized and it's trusted by the code. And this allowed to tokenize a dollar and to settle within seconds between two individuals and institutions as well.
Absolutely. And I think Sinan brought up a great point there around stablecoins being one of the first, after Bitcoin, of course, one of the first great use cases for crypto that has received widespread adoption. So I'm sure we're talking, your viewers, I'm sure come from a spectrum of, different backgrounds, and may not have had a ton of exposure with the crypto space yet, right? So I want to break down some of the things that Sinan is talking about there. So stablecoins are a way to stabilize value on a blockchain. So they're representative of a fiat currency, usually like the US dollar. And by that nature, they're always one-to-one with that fiat currency. Okay, so let's take the best example of a stablecoin in the space right now, which is Tether. Tether has a whole so by the way, Tether is one of the best performing companies in human history. So they're making somewhere in the order of, tens of billions, $50 billion a year with a 50-person team, so it's an incredible feat of an operation, and their value, really all they do at the end of the day is they hold a one-to-one peg between a token called Tether and US dollar. Okay, so they take a US dollar in, they mint a token on a blockchain and give it to a person, and that's their whole function. They're great at maintaining this peg, and it's really what it is it's a legal apparatus that they're operating, and people are attaching value to their ability to operate that one-to-one peg. Okay, so then that token is then used all around the world because blockchains are fully global, fully decentralized, and used by a variety of different technologies, different exchanges, different wallets. So what you end up with is a single company, a single legal apparatus can create just immense value in the world by tokenizing the US dollar. So does that make sense?
Yeah,
in terms of
entirely.
And to add on that, all these emerging countries, all their currencies are very volatile. It's either because of political reasons or money printing or different reasons. And they're looking for stability. And dollar is the global reserve currency, but it's hard for the people in emerging countries to reach it. And even if they have bank accounts to reach the dollars, the spreads that's offered to them from the banks are super high.
Terrible exchange rates.
And stablecoins like Tether or USDC allows these people in emerging countries to access dollars to run away from the inflation from their local currency.
Okay.
Because to riff on that, it's not that the US dollar doesn't have inflation, right? I'm an American. I've experienced probably unprecedented in America inflation in our context over the last 3 or 4 years. But then when you compare that to the inflation, in Turkey, in Egypt, in Argentina, then it seems small in comparison, right? Because other countries absolutely have even more inflation. Mm-hmm. But for us, 20% inflation is like unprecedented, right? So each of these monetary systems, by design, have inflation baked in, which kind of goes back to the original reason we got into the space, which is we think that computers and software can create better monetary systems.
Mm-hmm. And I want to ask, moving away from stable coins, obviously there are many other cryptocurrencies that are available on the market for people to buy, sell, and trade. What's the role of those cryptos in, the future financial system as an asset class or a value medium of exchange? What's your perception of that?
Yeah, we were actually talking about this right before we started, and I think Sinan is coming up with some really creative ideas for tokenization. I think we're still absolutely in our infancy when it comes to tokenization, because similar to what I was mentioning earlier around Tether, a token, so something like Bitcoin is a cryptocurrency. It's inherently valuable because of just the way it's designed. Now, tokens, there's something different, right? So like you have coins that are inherently valuable because they're the native unit of account for a protocol. And then you have tokens which are symbolic of value. So in the case of Tether, USDT is symbolic of Tether's ability to maintain that one-to-one peg. And then most people are trading tokens that don't have a lot of underlying value right now. But we both believe that in the future, people will create really good value that is symbolized by a token and can be traded around the world 24/7, 365 across borders. And I think Sinan has a couple great examples of things he's working on in the tokenization space.
And these tokens also represent governance rights. So in crypto, these tokens and decentralization allowed decentralized autonomous organizations, so DAOs. And instead of a board deciding on the future of the company, now every token holder is a decision maker, and they vote on the future and the progress of the project. And this allows for a group of people to have different incentive mechanisms to push forward and benefit economically together. And then, as Joseph said, we have traditional assets being tokenized and moved on the blockchain. For instance, if you think about the US stocks, the settlement time used to be 2 days. Now it's coming down to 1 day. But why isn't it seconds? And basically, crypto and tokenization allows the settlement layer to be instantaneous and in a trustless manner. And this also allows tokenizing different strategies and actually helps distribution around the world. Because now, if someone wants to reach a US stock or a US carry trade, etc., they don't need to open up US bank accounts. They don't have to go through all those cumbersome processes. Now, they just open up a crypto exchange account, and with their local currency, they can get into those strategies by just buying that tokenized fund.
Absolutely.
So they buy a tokenized version of that stock,
Yes.
if I understand correctly. Okay.
Yeah, and it's starting to emerge, but I think what will ultimately happen is big exchanges, big stock exchanges in the world, like the Nasdaq, will tokenize themselves. So they'll take the assets that they're already trading on their exchanges, and they'll do the tokenization, because with tokens, there is an element of trust, right? Because it's symbolic of underlying value. It's not inherently valuable just for its.
But it's decentralized, right?
Yes.
Okay.
So
Decentralized, but there's a centralized entity on the back end who's actually tokenizing it.
Okay.
Yes.
And giving that trust factor into it.
Yeah, because it's symbolic of value. It's not. So coins are inherently valuable. So
Yeah.
a Bitcoin, because it's scarce, because it's finite, because no one can tamper with the system, it has inherent value to it, right? Because it can be sent all over the world. It transcends time. You can carry it over time. So it's inherently valuable. But a token is more of symbolic of value underneath, right? That people can trade all over the world. And let's just kind of bask in how big of a deal, the innovation that Sinan is talking about there is, right? If you're a company, let's say in the US, and you want to get listed on the US stock exchange, you have to go through a massive, multi-year long process to IPO. And then everyone who's trading that asset also has to go through an independent, regulatory process. And also it's those kind of privileges are only given to a small number of entities, right? With this technology, you can launch a token much faster, in seconds, right? That's representative of your company, of your operation, of your value. And with that global distribution mechanism that Sinan is talking about, you're on 100 different exchanges, you're on hundreds of different wallets, all within seconds, right? And the whole industry, it's taking time, for us to learn how to do this well, because when you're living in a world with literally millions of tokens today, all of your systems have to scale, to millions of these assets, right? Someone should be able to launch a company somewhere in the world, and they want to raise money. They market their company. They also promise certain returns to investors all through the blockchain. and they can potentially get listed in seconds. So we're going from a place of similar to like what the internet did. John, you can just dream up this podcast, and within days we can get it on the internet, and it's got a global distribution mechanism. In the same way, you can dream up a company and get funded by a global investor base in days or potentially even hours, and it's on 100 different exchanges around the world.
Now, if crypto has so many use cases and is in essence an improvement on many different facets to our existing means of exchange or way of executing various things, why has crypto been so demonized by governments, by media narrative, to an extent where the average person has fear when the topic of crypto comes up, or they'd be a lot more scared to own a cryptocurrency than a stock?
It's because it's taking the power away from the governments. So the governments and the current monetary system exists because they can control the inflation rate by deciding on the interest rates. They decide on how much money supply, how much money is printed, then how much money is loaned out by the banks. So there's a fractional reserve system where the banks can lend out 10 times the money that they get deposits in. That's basically creating new money as well. And as Bitcoin becomes the store of value, and as Bitcoin and these other currencies become the medium of exchange, the government starts losing power from it. And also KYC and AML, is know your customer, and anti-money laundering is an important aspect there as well. Because the moment someone tokenizes the US Treasury bill, before it was more of a cumbersome process, but because of that cumbersome process, the government knew every single person who was actually buying and holding that token. But now, if I buy a US Treasury bill token, and if I create a liquidity pool on a decentralized exchange against USDC or USDT, then someone else that the government doesn't know about can come in and buy that US Treasury bill, and the US government has no idea who actually holds that T-bill. And because of that, the governments are trying to create these KYC and AML rules to centralize exchanges, and then they're trying to track the on-chain movements with tools like chain analysis and such. But again, they cannot do it in a 100% perfect manner. So because of that, they're always been kind of trying to get away from it. And also IMF is, for instance, El Salvador made Bitcoin as a legal tender. But then IMF came in, El Salvador needed a big loan to continue the operation of the country. And IMF's first request was take Bitcoin out as a legal tender and make sure that it doesn't become your real currency, because these government agencies are scared of the power of Bitcoin, and they're also scared of losing the power of printing their own money as well.
Clear. Yeah, so essentially it's due to lack of control and lack of information access that governments would have into this world.
For me, it's I think there's a lot to it. I think honestly, this question could be its own topic for an entire podcast, because I think some of it is some of the let's say the negative attention, around crypto has been well deserved. I think the community, there's a lot going on in the greater ecosystem, some of which I agree with, some of which I don't. It's kind of like the important thing for people, and I think people are in 2018 when we started pitching this, I don't think people realized the magnitude of this technology yet. They thought of it more as something that's more transient, that's going to be that's here today but isn't going to be here tomorrow, kind of a passing fad. Yeah. But now I think people really understand that it's an infrastructural technology. It's something akin to the internet or telecom, and it's going to take decades to build, and it'll change the world forever once it's fully mature. But it's very free at the same time. It's like the internet. Do we agree with everything that happens on the internet? No, absolutely not. But I think that as a globe, it's a net positive, right? It's brought everyone closer together. It facilitates easier and faster communication and education. So I think that the crypto space is a lot like that. And if you look at the early space, there were a number of security incidents. There was in the case of FTX, complete mismanagement and alleged fraud of the business. So there's a lot of things that have happened in the space, and we're just trying to continue to improve the experience for consumers and build it back better. Each time, each one of these cycles, we learn more, and we continue to build, and we hope the result really benefits people. And at the end of the day, I think we were talking, before we started that. I feel like I'm still so focused on the initial vision of Bitcoin, which is giving people a way to save value.
Yeah.
One of my favorite books on finance is called The Richest Man in Babylon, and it was published in like 1926. So it's an old book. It's very short. Everyone should read it. It has timeless financial wisdom. Like own thy dwelling and save part of your income. Very basic financial lessons. And the save part of your income thing is interesting, right? Because we currently live in a world where if I put $100,000 in a bank account, in 4 years, it's very possible that I could have $80,000 of value, right? It would still be $100,000, but I would only be able to buy what I could buy a mere 4 years ago, and it would reduce in value by like 20%. So the way our monetary policy works in the world today is you're constantly on this treadmill trying to beat 3 to 6% inflation every year. And then, as we were talking about in cases like in Turkey or Egypt or Argentina, the treadmill is going even faster. You're having to find really creative ways to beat that, beat inflation.
Yeah, I mean, the Turkish lira, unfortunately, has devalued 95% against the dollar over the last decade, which is, beyond comprehension.
Yeah.
And on that note, I want to ask you, Sinan, what inspired you to launch BiLira, to create a stable coin behind the Turkish lira? And then can you dive into the other services that BiLira offers?
Of course. So it was around 2017 and 2018. Tether had just begun, and they started to gain a lot of traction, and they started to become the dollar bank account of everyone in the world. And then we saw that other non-USD stablecoins start to pick up, like the Korean won, the euro, the pound. And then we realized that every currency is going to have a tokenized stablecoin version. So we decided to go back to Turkey and start building TRYB, which is one-to-one pegged stablecoin to the Turkish lira. And then, as you said, Turkey has been very volatile. So there has been different times where our product has been used for different means. Sometimes it was for people to hold Turkish lira. Sometimes it was for people to move into Bitcoin, USDT, or USDC. And then as our business grew, we started to become a market maker. So we started to provide liquidity to all exchanges in Turkey. And we're providing two-side liquidity for Turkish lira pairs. And then we started our own brokerage firm in Turkey as well, as an OTC desk.
Okay, so just to explain to those that are not so familiar with crypto, starting brokerage is essentially creating an exchange, right? Exchange services.
Exactly. But instead of having an order book, you're connected to multiple market makers on the back end.
Okay.
A user comes and asks you for a quote, and you get the pricing from the market makers. You give the user the best price, and you put a commission on top. And that's a brokerage service. And for the market making is when there's an order book, let's say Bitcoin trades at $90,000 today, there's retail who is trying to buy Bitcoin or they're trying to sell Bitcoin. So that creates some liquidity. But then there's also professional market makers like us that provide, that says, okay, I'll buy Bitcoin at 89,900 and I'll sell Bitcoin at 90,100. And then as people buy and sell, our revenue comes from the spread in between.
Okay. And I want to ask you, as you know, you've launched a stable coin, the Turkish lira stable coin. Do you foresee a future where governments will allow or, you know, stand on the sidelines while these stable coins of currencies exist? Or will central banks create their own digital currencies in hope to oppose that? Do you think they're going to ban the stable coins, or there's just going to be two options?
It's different in every country. So, for instance, in China, they issued a CBDC, and the goal was for more surveillance and for more tracking. For instance, in the US, Trump said that they're not going to allow CBDC and that they're going to support, create legislation and support the local dollar-denominated stablecoins. For instance, in Turkey, the central bank is working on their own version of Turkish lira CBDC, but it's being built on a private blockchain instead of a public blockchain like Ethereum. And the reason is they don't want every other central bank or government to see every transaction happening there.
Why would that be?
So it's because of the privacy reasons and because of the country's self-control, and not self-control, but security, I would say. And so how we envision that's going to happen in Turkey, at least, is that there's going to be a central bank digital currency, which is on a private blockchain. And then there's going to be bridges that bridges to public chain stable coins like us, where people can go in between and participate in DeFi on the public chains. And whenever they want, they can go back to the central bank digital currency.
Clear.
Yeah, and there's so much value, to countries to create CBDCs. I have maybe a little bit of a different view than a lot of the Bitcoin community. I think CBDCs are a great idea. They solve a lot of problems for countries. I think they keep all of the local banks honest and on one system. Whatever is defined on the blockchain is the law, right? It's software is law now, so it keeps all of the banks on the same system, keeps them honest. I think there was an article or report put out in Russia how they were experimenting with using a CBDC to control corruption, in the local banks, because if you have it all on one system and it's viewable, it's much easier to introspect what's going on. And I think this speaks to how blockchains are. It's an accounting revolution in a way. I think something similar happened in 15th century, the Renaissance in Italy, where they started using double entry accounting. It was originally called the Indian method. It came along the Silk Road in North Africa, but then it was popularized by a book that was written in the 15th century or so. So it has this long tradition. But anyway, so double entry accounting at one point in time was a big revolution in Europe, right? And North Africa and India.
Can you elaborate on what double entry accounting is?
Yeah, so very simply, in ledgers were one of the first forms of writing that we came up with as humans. So one of the first uses of writing was to keep track of the amount of a good, like grain, for example. Mm-hmm. So we have records of like thousands of years ago, clay tablets showing clear like a clear ledger,
Transaction,
who owns what in the grain store or something like that. Then in the 15th century, there was a double entry accounting was popularized, but as I mentioned, it was originally called the Indian method and actually moved from India across North Africa and the Middle East into Europe in the 15th century, and where a book by Luca Pacioli was written about double entry accounting. And really all it is single entry accounting is like a list, right? You're keeping a static list of this person owns this amount of grain. Double entry accounting is making sure that value is either not created or destroyed. So every movement of money has two entries: the source account and the destination account, the debit and credit, debito and credito. So it's interesting to think that like at some point in time, that was a massive accounting revolution. Yeah. So now blockchain technologies are the next accounting revolution, because you have a debit and a credit, you have a source account and a destination account, but then you also have a third, like a copy that is globally distributed around the world. So there's like a third copy, and some people have even dubbed it as triple entry accounting, because you have the source, you have the destination, and then you have like a symbolic third entry that is on multiple computers all around the world.
Which obviously by design is not possible to cheat and transparent, which what makes it so valuable.
Exactly. I was just going to say, so there for governments, I think there are massive use cases for blockchain technologies and CBDCs, because at the end of the day, a nation, can absolutely, and has for hundreds of years created their own monetary policy, right? So a CBDC is their monetary policy. And then it's a beautiful thing that we also have the option of public global blockchains now, because now that presents another financial system that people can choose from. So a consumer ends up with lots of options for the monetary policy they want to have in their lives.
But in theory, if you have this degree of transparency and trackability of all these transactions, then in theory, corrupt governments would not want this to take place, right? Because then the public can see those transactions.
Yeah, I think that it's every country. So in the case of private blockchains and CBDCs, you can run that software system however you want.
Okay.
Right.
So you write the rules.
So I like to think that this will lead to less corruption in the world, more transparent financial practices, better, saner economic actors. But I also, I think it's every country's right at the same time to, at the end of the day, what you get is every country can create their own monetary policy and is now competing with the global options. So if people choose the global CBDC, that's a choice, as opposed to like that was the only option for the last 100 years. But most of, to go back to kind of the ancestral learnings, for most of human history, we've had gold.
Clear. And
yeah.
I want to ask you, you're the co-founder of Rain, the first regulated crypto exchange in the Middle East. I want to ask you, how did you make that happen? And why did you choose to create an exchange in the Middle East rather than any other market?
Yeah, so it's a really great story. The high points are, we started researching so all of my co-founders, we got into the space in 2013, right around 2013, right up during the run up, to Bitcoin was around $1,000, came back to 200, and then started growing from there. So we all started learning about it, investing in it at that time. We started going professionally in the space in 2016. So we started doing the research that ultimately led to Rain in 2016. We looked all around the world for a great opportunity. And we felt like the Middle East and North Africa could really use a really high quality, well-run crypto exchange, similar to what we had experienced in the US with Coinbase. So we thought it was just a really incredible opportunity. My co-founder Yahya is Egyptian. He started the very first Bitcoin meetup in the MENA region in Cairo back in 2013. And then my other co-founder is AJ Nelson, who's my childhood best friend, and we've run multiple businesses together now. So the three of us, we're all just really passionate about Bitcoin, aligned on the company we wanted to create. started reaching out to central banks in multiple different countries. And ultimately what happened is we made inroads with the Central Bank of Bahrain in early 2017, and they just welcomed us with open arms. We received such great reception by the Bahraini government. We ended up working with them for 2.5 years to form the crypto regulation that we were eventually licensed under. It was the first of its kind in the Middle East. And probably my favorite story to tell about this journey, there are two. One is that we flew to Bahrain and we had jobs at the time and we didn't want to miss work on Monday. We were living in San Francisco. So we flew in for like literally one day, and then turned around and had to leave again. And we made it to work at 10 a.m. The next week. But the second really interesting piece of this is in early 2019, there was a financial conference in Bahrain, and they had gotten Steve Wozniak, one of the co-founders of Apple, to headline the conference. So at this point, no one knows who we are in Bahrain. We're sitting in the back, us co-founders, and Woz is on the stage talking to I believe at the time it was the governor of the central bank, and arguably the main person that we needed to convince that this was a good idea to start a crypto exchange in Bahrain. And the governor asked Woz, what technology are you really excited about today? And he responds with Bitcoin. And he said that there's just a certain purity and simplicity to it that is really beautiful that I look for in technologies. And, we just had to pinch ourselves because we were in the back. We hadn't gotten the license yet. We had been burning capital for 2 years, not knowing if it was going to work out, took investor money. And Woz is it gave us that validation on the stage. Bitcoin is the most exciting technology in the world right now. So luckily, within a month, that regulation got released. It took a few months to get fully licensed, but we were fully operational in 2019. Saw a real meteoric rise, with the market in 2021. Raised $120 million from Coinbase, Kleiner Perkins, and Paradigm, and and have been growing the business ever since.
Awesome. What a story.
Yeah.
May the success and the journey continue in the same manner that it has been. Very, very inspiring.
Thank you.
Sinan, I want to ask you, how do you see crypto and AI intersecting in the future? Obviously, AI is a very revolutionary technology. Many compare it to things like, internet and telecom, where those two things are integrated in almost everything that we know of in our lives today. So do you see an intersection of AI and crypto?
So how I see this is what crypto brings is decentralization. So it might allow these AI clusters to become decentralized and people to be able to pull data from these tokenized clusters and basically pay to those clusters to train their own AIs. That's one potential. The second potential is tokenizing potentially the future revenue or potentially the investment aspect that's needed to train those AIs, and democratizing the ownership of it. That's a second thing I see of. And what do you think about it?
Yeah, I think AI is also one of those technologies that is very much in its infancy. I think that it's been foretold in science fiction for a long time. Isaac Asimov used to write about this idea of general intelligence, being able to ask a machine and it can respond to you in superhuman kind of intelligence. I think that LLMs have proven super useful for a lot of things. I think that with each of these technologies, there's the good and the bad, right? I think that they're great. It's great for research. It's great for education. It's great for things that might have taken you, an hour on Google, like looking at Wikipedia, looking at all of these things. It can be just it distilled in a
yeah.
Exactly, yeah. I think that's really cool. So in terms of applications in crypto, we've found use cases in customer support. We found use cases in writing content, like giving us a foundation for writing educational content, things of that nature. The art aspect of it, I think that I know you really appreciate art, and I tend to think that it's created a lot of noise in terms of like visual noise on the internet. So I'm hoping that we come up with better ways, because the technology is amazing for creating art, right? Like you can create it faster than ever before, but I don't think people know quite how to use it just yet. And maybe one day it can give financial advice. I think that that economics and sociology, they're just so complicated, and so you can ask an LLM something and it'll give you an opinion about how things have worked up until this point. But then humans are very good at coming up with like just new things all the time. So the LLM may not have experience with some kind of arbitrage or some kind of dynamic that's changed in the world, or, we're not seeing anything like that yet. But I think it's amazing technology, and I think we should embrace it and continue to figure out how to best use it. And a lot of people say AI as just like this big technology, but it's actually, for me, I'm a software engineer by trade. So it's large language models, machine learning, image recognition. It's these things that we've progressively gotten better at over time. And then maybe one day we will have a general intelligence, an artificial general intelligence. That's what I've read the investor memos and everything, and XAI, OpenAI, they're all going after that. Like large language models are cool, but they hope that this will usher in some kind of like they're hoping to find an artificial general intelligence someday. So maybe this is the start of it. Maybe there's a whole different technology they have to invent to get to that point. I don't know.
Yeah, I recently attended a talk where the CEO of Binance and the Coinbase head of strategy was speaking, and the head of strategy at Coinbase had essentially given this example of how AI and crypto would intersect in the very near future that I found very interesting. And he mentioned that for example, different medical institutes have access to different medical databases. And with AI, you can run 1 million different test simulations at a time rather than one at a time with human beings. And given the fact that different AI databases or medical research centers have different sets of data, what crypto will enable is for those two, let's say, medical research centers to communicate and exchange data sets that may enable the other medical center to complete or run various different simulations. So let's say if you're...
So like machines paying for things as opposed to people.
Exactly. So instead of human beings transacting data and then running tests at a far slower pace, you have AI doing that 24/7 that can look at every piece of data at a time and make decisions looking at the entire data set rather than one at a time. And I don't know, personally, I found that that is really cool, fascinating.
Yeah, and those are the kinds of things that are possible with a fully virtual digital financial system.
Before we wrap up, I want to ask 2 questions that everyone new to crypto or considering to get into crypto is itching to ask people that are in the space. One, what do you guys think your Bitcoin price predictions are over the next couple of years? Classic.
Yeah.
And 2, what advice would you give to someone who's never owned any crypto but wants to get into crypto?
So I think the Bitcoin price depends a lot on government printing and how the monetary policy goes. But I see it in the next 10 years, Bitcoin reaching around 750K.
Mashallah.
Yeah, I think that I see Bitcoin continuing to grow in value. I think I agree. I think $750, $1 million, is very attainable this decade. I would say, potentially like a little over a decade. I think every cycle always surprises me. In the previous cycle, it reached around 70,000. I think it topped out right at 69,000, and I thought it was going to go to maybe 40 or 50, right? And then the previous cycle before that, it went all the way up to 20, and people thought that was completely bonkers, at the time. So I think this next bull run will again surprise us, because just the amount of adoption in a small amount of time always exceeds like what you think it's going to be. So yeah, I would say like in a decade span of time, $1 million. I think then I would predict that the next cycle will result in $200,000 to $300,000 Bitcoin.
Oh wow!
Yeah.
And do you share the same concerns that some people share of quantum computing making Bitcoin a non-perfect system because thousands of ledgers can be hacked at the same time?
This one's been talked about ad infinitum, on the internet. There's tons of videos about it at this point. I would definitely recommend people go watch those, but it's been debunked, multiple times.
So you don't think there will never be a stage in which quantum computing can hack or destroy Bitcoin?
I don't want to say never, but the problems that quantum computing is good at are different than, so cryptography is based on really, really big prime numbers, like numbers that we can't even comprehend as people. So from what I've read and studied, quantum computing is no better at those classes of problems than traditional computing, is the short of it. Quantum computing is very good at certain problems we have in the computer science space today. So it's going to like completely revolutionize a lot of different areas, but it's no better at breaking cryptography than traditional computing, from what I've read.
Clear. And where do you guys see the next big wave of adoption into crypto?
Really quick, I want to answer that question that you asked around like what people should do.
Yes, what advice would you give someone wanting to get into crypto?
Because I think this is a really important question, that if you're getting into crypto for the first time, it's easy to get overwhelmed. There's tons of different assets, tons of different experimentation going on. I think Bitcoin was the kind of the genesis of this entire space, right? And it's actually like a 30-year-old industry dating back to the 80s, where people were trying to send money over the internet. But so Bitcoin was the first successful project. I think it still has the clearest customer value proposition today. So I would recommend that stick with Bitcoin to start exploring the wider space, but stick with Bitcoin. And every cycle, I like increase the percentage of the portfolio that I recommend. So, in 2016, I was saying only invest what you can afford to lose. Then in 2020 and 2021, I was like, you should probably put 5% of your portfolio into Bitcoin. And now I'm saying, like, I think if you don't have, let's say, between 5 to 15% of your portfolio in Bitcoin, then you're slowly losing money due to inflation, and you're losing out on what is potentially a very large upside as more people adopt digital gold, Bitcoin, aka digital gold. So I think that you have the largest financial institutions in the world, Goldman Sachs, the U.S. government, talking about having a strategic Bitcoin reserve. You've got to pay attention to what's happening, and I think 5 to 10% of your net worth is very reasonable. And I would even I've been 90+% in Bitcoin for over a decade. I've pretty much completely left the traditional system. Yeah, I've pretty much left the traditional system because I just find Bitcoin is just such a better. It makes so much more sense to me, as a person.
Fair enough. And Sinan,
to add on that, so the first step is reading the Bitcoin white paper. That's always the fundamental. It's important to understand the fundamentals of Bitcoin and crypto to be able to do anything in the crypto space. And then after Bitcoin white paper, read the Ethereum white paper to see what Bitcoin's technology, the blockchain technology, is allowed with the if function and creating a smarter computer, in a sense. And then don't just speculate, but go out, open up a wallet, and start playing with the crypto space. Try out these different protocols, try out these different DeFi applications.
Gain experience.
Gain the experience and learn. And then I'm sure you'll have a lot of new ideas how to improve it.
Amazing.
Yeah, there's nothing better than, being able to own crypto, some amount. It can be any amount. It can be the equivalent
Everyone
of like
has to start
$50
somewhere.
worth of, exactly. And when you use it, when you send it, when you receive it, then you start to understand what it is.
Awesome. Well, there you have it. Golden tips on how to get into crypto if you're not already vested. Sinan and Joseph, thank you both for coming and for sharing all these insights. And yeah, wish both of you guys a lot of success in your ventures.
Thank you.
Amazing.
And thanks
Thank you,
for
John.
having us.
Thank you for having us. Great.